Welcome to the second video in my series on zero-based budgeting and cash flow management using the Managing My Money or MMM Excel tool. This video assumes that you have already watched the first video, which provided an overview of zero-based budgeting and the MMM Excel application. In this video, we will jump right into creation of a zero-based budget. So you can see here on the tool, we'll focus on the first section, which is creating your zero-based budget. It includes step 1 and step 2, financial goals, followed by income and expense planning. So the first step in your zero-based budget is to go to the goals tab. For this demo, I will fill in the optional longer-term goals and the medium-term goals, as those are helpful to focus your short-term goals in the longer-term direction. These can be very high level in nature and do not need to have a specific dollar value for today's purposes. However, the key input for a zero-based budget is this year's goals. These goals should be very specific with a clear dollar value to be achieved this year. For example, in the medium term, I want a 3-month emergency fund. I will not get there this year, but I can set a goal to end the year with a $1,500 basic emergency fund in place. I have put some other goals here around debt reduction and pre-tax employer savings match, as they will help in demonstrating setup of all 3 types of goals in the zero-based budget: normal savings goals, pre-tax savings goals, and debt reduction goals. So this is step 2 of 3 of your zero-based budget creation, which is to enter in your income plan for the year. So you'll be entering in on this first column here all of the income sources that you have. You can put up to 12 of them. In our case, we'll put 4 as an example. So let's assume here that I get 2 paychecks a month. So I have a primary salary check 1 and primary salary check number 2. Then let's assume that I have a tax refund based on history that I can expect to get, and also that I have a side job, or in this case, let's pretend that I have a rental unit that I get income from each month. So the number I'll put for my check every 2 weeks, approximately twice a month, I get $3,000. So I can go ahead and take that $3,000, copy it down because it's the same 2 times a month, and copy that across. Then for my tax refund in April, I expect $750. And for my rental income, I get $800 every month. So I will copy that across. So now you can see at the total here, I get $82,350, which represents all of the income that I plan to get this year. An important part to note, and it's commented on in the instructions, the amount that you enter for your salary is the amount that actually hits your bank account, not the amount that you earn in wages, meaning your employer will pay you your earnings, but then they will take out money for taxes, and they'll take out money for any benefits that you may get through them, including retirement contributions, etc. So what you want to put in here does not include that. This will be the amount that actually is deposited into your bank account, because that's the amount that you can control. And so we're going to base your zero-based budget around managing that money. So this completes step 2 of 3 of your zero-based budget. And we're ready. We've done the goals, step 1, we've done income, step 2, and we're ready to click expenses and go to step 3. This is step 3 of your 3-step zero-based budget. You'll see that on the top middle, it shows a green box that shows remaining income. So this corresponds, if you go back to the income page, to the total of all the income that you're projecting to have for this year. So now what this is going to do, as you enter in, and you'll see the instructions here, there's several steps. You're going to add in expense categories. And for each category, you're going to put in an expense type. and then you're going to put in an amount that you're going to budget for that category. And you're going to do that until your remaining income goes to zero. So you basically allocated every dollar of income that you have to a purpose. Okay, so let's go ahead and start with that process. And what I'd like to do is just mention, when you're putting this in, you can you put in your category name under expenses. It can be anything that you would like, right? And then you can put in a group name, which is optional. You don't need to put in a group name. I personally like to group things because it helps me when I'm looking and viewing my expenses. So in this case, I'm going to go ahead and start with my goals, right? So I'm going to have a group called goals. So let me go ahead and put in one of my expenses. So I said I wanted an emergency fund. So I'm going to put in emergency fund as one of my categories. And I'm going to call this group, you can give it any name you want, but I'm going to call it goals, right? So this is my goals group. And now I need to pick an expense type. So you have three options. You have a monthly fixed, monthly variable, and annual. So what's the difference? Those are described on the right-hand side here. Monthly fixed are expenses that happen every single month, and they're the same amount every month, and you cannot change them unless you cancel. An example would be maybe your rent payment. Your rent payment is going to be the same amount every month, and you can't change it. Another one might be maybe you have a internet bill, right? That you're paying the same amount every month, and you really can't change it unless you switch plans. But it's going to be that you can't really month to month change the amount. So monthly fixed is that kind of expense. Monthly variable are expenses that occur every month, but you can change the amount. An example would be groceries. Every month you need to go and get food, but the amount that you spend every month is variable. You can choose how much you want to spend. Same thing with some discretionary like eating out or entertainment. Those are variable expenses that you're going to have every month. By the way, you'll notice that if you click on the hint, this little red dot here, it gives some examples about what monthly fixed expenses are and what monthly variable expenses are. Then there's the annual expenses. Annual expenses do not occur every month. And again, there's a hint that shows examples of those. Things like clothing, right? So if you're going to buy clothes, you're not going to buy clothes every month. You're not sure exactly when you're going to buy them, and you don't know the amount when you need to spend it. Another might be some medical bills. You don't know when you're going to go to the hospital, but when you do, there's going to be an expense you need to budget for. So those are called annual because you're not going to be budgeting for them on a monthly basis. So those are the options. So in this case, for my emergency fund, I want to make this a monthly variable type. And the reason is I want to be putting aside money every single month for my emergency fund. Now, I had said that I wanted an emergency fund of, so you'll notice that when I pick monthly variable, it grays out the annual spend because this is not an annual budget, it's a monthly one, right? So it grays out the annual spend and it highlights the monthly spend. So now I need to type in a monthly spend. How much am I going to spend set aside for my emergency fund? So in this case, I had said I wanted $1,500 a year. Now I can divide that by 12. I could put a formula in here, and that comes out to $125 a month. But just for the purpose of this, just to let you know, if you don't know Excel, you don't need to use formulas. You can just type in a number. And to be nice and even and rounded for this example, I'm going to go ahead and put in $140, right? Now, one thing I want you to see, look at the remaining income. If I remove that $140 a month, let me delete it. It goes to $82,350. That's my total income. If I put in $140 a month, it goes down. So basically, it's going to keep track of your funds as you're allocating them until you hit zero. Another thing to note is when I put that $140 a month in, you'll notice that the monthly variable expenses went up to $140 a month and gives me the annual total, $1,680 that I'm going to be spending on my emergency fund. More than the $1,500 I had planned, but that's fine. That was just a goal. You know, your goals are your goals. This is your plan. Okay, so let's go ahead and do some other goal group items. So the other one, I said I wanted to do an extra loan payment. So I'll put that in here, extra loan payment. And I said that my extra loan payment, I'm going to put that again, that's the group is going to be goals. It's going to be the same one. So my extra loan payment, I'm also going to make it a monthly variable expense because I want to be paying on it every month, right? You could make it fixed, but that doesn't give you any the flexibility because I might choose to pay more or I might have to pay less. This is extra. This is towards, I'm going to put $100 on this one. Okay. And we'll go ahead and now another goal that I had put in there was my 401k match. Okay. So I'll put that as a goals group. And by the way, once you've typed in something, you can type in G, the letter G, and it'll fill in the rest for you. Once it finds a unique string in that column. Okay, so my 401k match is going to be actually a monthly fixed. I can't change. Basically, I'm going to, it's going to be pulled out of my paycheck every month. I'm subscribing with my employer. So I'm actually going to, this is not going to be coming out of my paycheck. I mentioned to you on the income is only what you see on your paycheck. This is an example I wanted to show you about having a goal for some savings that is pulled before your paycheck comes out. So in this case, I said 5%. 5% is about $300 a month. But remember, it's a match. So in this case, I'm going to put 600 because dollars a month. That's my 300 plus my employer's match means I'm going to get $600 a month towards my savings. Part year, because it's a monthly fixed, I now have the option to determine if this is going to be part year, meaning I'm only going to do it for 1 month, 2 months, or up to 11 months. And in this case, no, I'm doing it all year. Is it a saving plan? Yes, this is part of my savings goal. This is where I can target to let the system know that this is a goal I'm tracking. And now here's what I wanted to show you. That now that I've marked it as a savings goal, I have an option to say, is this pre-tax or not? And it's very rare that you're going to have a pre-tax. Really, I think 401k might be the only savings goal that might be pre-tax. But if your employer has something that gets pulled out that you're contributing to, even if you're not, if the employer is putting it aside for you, you can track it here. Now, one thing that's very important, look at the remaining income, $79,470. If I put this to 0, it does not affect the remaining income. And the reason being, I'm going to put the 600 back. When you mark, I wanted to show you what the pre-tax column does. This is optional, but the pre-tax column basically says, I'm just tracking this as a goal, right? It's not coming out of my income that I get in my paycheck. I can't, because it's being pulled out of my paycheck pre-tax. I never see it, right? Which is a good thing. But that way you can track it here as a goal. You can show that you're meeting a savings goal and it's not reducing the amount of income that gets deposited into your bank account. That's what this pre-tax does. Okay, so those are my goals. Let me say that I have another goal, which is another savings plan. So say, okay, I also have a savings plan, right? That's different from my emergency fund. And in this case, I'm going to call this an annual expense, meaning I'm not going to contribute to this every month, right? Like I am the other ones. But I have a goal here to put $1,000 this year in a special savings plan. You know, you could be saving up for furniture or for something, a vacation or whatever you're saving for. So is that I'm going to come over, you'll see the rest of these are blacked out because they don't, for an annual expense, they don't really do anything for me. But I need to come here to where it says, is this a savings goal? I'm going to say yes. And again, it's important that this flags the system to be able to help you track. You'll see on the bottom, there's a tab called Goal Tracker. Anything that you put yes for savings plan or for the last column, which is debt reduction, will show up as a goal tracker, as a savings or a debt goal tracking to help you see how you're doing during the year. Okay, so I'm going to say, yes, there's a savings fund. In this case, no, it's not pre-tax. I'm going to take the money that's deposited into my bank account, and sometime during the year, I'm going to put $1,000 in towards savings. Okay, so those are my goals. Now we're going to go ahead. I think I've explained now what each of these do, each of the columns. The only one that I haven't is maybe the start column and the months column. So let's do that one. So let's do a car payment. So let's say that I have a car payment, and I'm going to put this as a group auto because I'm going to have other auto related expenses. And I'm going to say that my car payment is a monthly fixed. So I'll pick that. I pay the same amount every month. So my monthly spend on this car payment is $400. Now it's going to say here, is it optional or part year? Optional is something that lets you flag if it's a monthly expense, like a fixed expense. You can say it might be like a discretionary thing, like you know, the Netflix or Hulu, and you can say, yeah, this is optional, meaning I could end it if I needed to, right? But in this case, the other flag here is it part year? Well, I'm assuming here that my car payment that I have here, I'm almost done paying off this car. I only have 10 months left this year to pay it off. So I'm going to say, yes, it's a part year, and I have 10 months left to pay it off, right? Now it's going to ask me, when am I starting? Well, I'm going to start in January. The reason you get a start date here is because there might be another type of expense where you say, I don't have a car yet, but I'm going to buy a car in April, right? So I'm going to plan that I don't have any monthly expenses yet for my car, but in April I'll start having it. So that way I could put in $400 a month. Yes, part year. I would put in, what's that, 9 months, and then for my start month I would put in, you know, April or May, right? Depending upon when I would start actually making payments on it. That way it can calculate exactly how much of the income is going to go towards that. So again, this can be used for any fixed payments that you're going to be starting or stopping during the year. Again, this is not a common occurrence, right? But I wanted to demonstrate it for you in this example. It's not a savings, it's not a debt reduction, that's just normal. Okay, so now I've shown you every single column on here. So the rest of these should go pretty fast, right? So I'm going to do the rest of my auto. So I have fuel. So fuel for me is, again, it's an auto group. And this, I'm going to call this one a monthly variable because I don't know every month. It could be different how much I pay on fuel. But I'm going to set aside $100 a month for fuel payment. And that's all I need. I don't need any of the rest of these. For most of your budget, that's all you need to put in. The expense, the group, the type, and an amount. So let's go on. The next auto is my insurance. So I have different types of insurance. In this case, this is my auto insurance. I'll group it with auto. And I'm going to call this one an annual expense. Now, some people might pay it monthly as a fixed. In my case, I just pay it once a year, right? Or I might pay it every 6 months, right? So whatever it is, I'm not paying it monthly. So in my case, it's $1,000. Maybe I pay $500 every 6 months or something, but I put it in there, and that's it. That's all I have to fill in. So now I go to the next one. So maintenance, you know, the car could break down. Do auto. Okay, so my maintenance is going to be annual again because I don't know when it's going to need maintenance or if it's going to break down. I just know I need to have some money set aside for when it does and to do the oil changes and things. So I'm going to put $2,500, you know, for this car. It's just based on history. I know that's how much money that I need to set aside for car repairs and maintenance. Okay, so then there's registration. So I know that I have to do this every year. So this one is going to be also an annual expense. And I'm going to put in $100 to do my annual registration. And that's it for my auto. Now that I have shown all three of the expense types and given examples of all of the columns on the entry sheet, Let me paste in my housing and household group expenses to move us along. Now let's go and do medical. So I'll just call medical. And in this case, I'm going to show you that your group name can be the same as your expense name. I only have one expense. All my medical expenses, I'm just going to categorize them as medical. Now, different people can have all sorts of details, medical this, medical that, orthodontist. I'm just going to put it all as medical and just group medical, and that's it. So I'm going to call this an annual expense because I don't know again when, but I do know how much I'm going to set aside. I'm going to set aside $3,000 for this year. Okay, now let's do another example. One thing we don't, if you look on the middle here, we don't have any debt reduction goals yet. We have savings goals, $8,200, but we don't have any debt reduction goals. And we said in our goals, we did say we're going to, wait, here, I missed it. Extra loan payment at the top. This is actually a debt reduction goal. So I'll just click yes, and now it'll show that I have a debt reduction goal that can be tracked. Note that all of the items in the goals group should have either savings plan or debt reduction marked. So emergency fund should also have savings plan marked as yes if you'll be tracking goals as part of your zero-based budget. Note that the last three columns for savings, pre-tax, and debt reduction are completely optional. They're not required for managing your zero-based budget, but they're highly recommended if you want to separately track progress towards these goals. Now, moving along, I will paste in my discretionary group, optional services group, and personal care group expenses. Okay, last one, utilities. So now if you look at my income, I only have $6,880 remaining, right? So of course, in this example, I know that it's going to even out, but I want to take this time to show you, we've been doing, if I go back to the home, under step 2, it shows work to do. And the reason it shows work to do, on the goals, it said work to do until I filled in my goals. This one says work to do because it either is recognizing that I haven't filled in any income, or that my expenses, I haven't yet allocated all my income. There's still some income left. And so if I go back to home, work to do, you'll see that there's 3 tabs in step 2, income, expense, and validate. So I'm going to go to the validate tab, and you'll see the validate tab is just a report. There's nothing you have to do to fill in. It basically tells you, do you have a solid zero-based budget, right? What you want is for this balance box to be green, right? That you have a valid plan. That box will turn green when all of your income have been allocated. There's 2 other options, right? It'll be orange. Orange means, hey, you have income that's not yet allocated, which is what we have now. Or it can be red, which means you have put more expenses than you have income. So you need to fix that, right? Either by looking for another source or planning for another stream of income, or by reducing your planned expenses. Okay, so let's go back here now and put in the last set. So in this case, we'll put in electricity, and I'll call this one utilities, and I'm going to call this one an annual expense, and I'm going to call this $1,500. And then I'm going to go down to gas. I'm going to call this one utilities. I'm going to call this one an annual expense, $420. I put these as annual expenses because they do happen every month. So you could put them as monthly variable. Again, there's no one right way to do this one. At the end of the day, you're going to be managing it, right? But I put it as annual. It gives some flexibility because they're seasonal. Sometimes in the year they go really high, right? And sometimes in the year they go really low. So it's hard for me to put in a single monthly target, even if it's variable, a monthly target for me to say this is about how much, right? It swings too much. Because of that, I make it annual, and then you'll see later how that's managed. Okay. So now I'm going to do internet. So I call internet service personally a utility, right? So I'm going to put that under utilities. We're going to call this one, but this is different. This is going to be a monthly fixed. Unlike those other utilities, this one, I know how much I'm paying every month. So it's $80 a month. And now I have $4,000 left. I'm going to go and say, okay, there's water and sewage, right? This is going to be utilities. It's going to be an annual expense. It's going to be $1,000. Okay, so I have $3,000 left on my my plan. So what I want to do is then say, okay, now I have that money left. Then where can I allocate that money? So if I look at my validation, it says, hey, you're not green. You have unallocated funds. So this is a good problem to have. I've gone through and I think this is all my expenses, but I still have money left. Okay, I don't want to just leave that there. I want to allocate it to something. So in this case, just for this purpose, I'm going to say, oh, yes, that's right. We're going to do some travel this year, right? And I need to account for that. And so my travel, I'm going to call that under discretionary. And I'm going to call that an annual expense. And I'm going to put $3,000 towards travel, right? So some vacation we're doing this year. Now, look at what happened at the top. So I'm going to show you again. So I'm going to delete this one. You'll see I had 3,000 remaining. And if I put 3,000 there in, it goes away. That means I can confirm when I go to the Validate tab, it goes green, right? I have my balance is 0. Basically, my income is $82,350. My total expenses are $82,350, and I am green. I have a valid plan. Now I'm going to show you. What if I had said, oh, I'm going to put in $3,200 towards my travel? You'll see at the top that it'll flag that your remaining income is in the negative, meaning you don't have enough income to meet your plan. And if you go to the Validate tab, you'll see the same thing, the negative 200, and it'll show that you are overspent, right? So that gives you an opportunity to come in and either adjust your expense plan. This is where priorities come in, right? Because I have goals to reduce debt, to save. There are opportunities for me to reduce, but I can also reduce on some of the more basic fundamental things and try to keep my goals. That's a priority decision that you can have a conversation in your family around, but it lets you have visibility and, as I mentioned previously, control. You at least know what's happening and you can make some decisions about it. That is it. That is how you create a zero-based budget. You'll see that the red flag that work needed has gone away. You now have a valid zero-based budget, and we've created it from scratch. Now, I think at a good point that if you have found value in what you've seen and what this tool can do, then you can meet these prerequisites, then you may go ahead and send an email to mmm.expenseplanning@gmail.com to get download instructions and an activation code. It's a free tool. I mentioned this in the overview. This is video. This is something that I built on my spare time, and I'm trying to give back to the community to help other people to benefit from something that I've seen has benefited myself and friends of mine. But it requires that you have a local current version of Microsoft Excel. Everything is stored locally on your machine and requires a local Office 365 Excel version. It also is limited. It only uses United States regional language data and currency formats. And optionally, you will see that there's you can do everything here free by entering your own data. There is a way, some people have asked me if there's a way to get data pulled in automatically from their bank or credit card, etc. And the answer is yes, but that requires a paid subscription to one of two unaffiliated services. So I do not have any affiliation with these two, but I have the tool does support both of them. So Tiller Money, it's preferred in my mind because it's a one-step direct bank to Excel import. And you can go to the Tiller Money website, and there's also instructions in the tool if you want to set that up and how you can get that from Tiller Money. or Quicken. So Quicken is a two-step. So Quicken imports data from your bank into Quicken, and then the tool, I have a separate video that shows how, can then grab that bank data and then pull it from Quicken into this tool. So that's it. I hope you found value in this video, and thanks for watching.